everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. Tilewa Adebajo, the Chief Executive Officer at the CFG Advisory, joins me right now. Good morning, Mr. Adebajo, and welcome to the program. I hope you can hear me and see me.
Good morning. How are you?
Okay. Good morning. Let's get started. I don't know if you listened to my intro, my monologue.
Yes, I did.
Yes.
Quite interesting.
Oh, thank you. I did say something earlier that we have the two economies story. The data that the government is seeing and our experiences as Nigerians talking about our daily lives. What do you have to say about that, that we're seeing that economic growth is growing, let me put it that way, GDP growth is increasing, yet we are not seeing that experienced in our daily lives. So why is growth not following stability? What do you think are the structural constraints that still remain? Why we are not feeling this? If you talk to any government official, they are quick to tell you that. A few days ago, the Minister of Finance did brief a few of us journalists in his office. And he was saying, oh, he reeled out, the update on the economy. And he talked about this, the growth and all of that. But where do you think that the gaps still remain?
Thank you, Nancy. First of all, I think let us correct the impression. GDP growth, fourth quarter last year closed at 3.8%. First quarter this year, it was 3.1%. So we're actually not growing. The economy is actually in decline. If you take a look at that data between the fourth quarter of last year and the first quarter of this year, there's been a decline in GDP growth. But again, when you talk about all these numbers, they're normally indicators that you abide with, that you look at. But that sort of growth numbers, the problem is that we are so fixated on all these numbers that we do not look at the whole picture. Let us take a look at the macro side of things. Let's leave the micro things and look at the whole economy in a holistic manner to see exactly what's going on. Yes, what is important now is that the economy is not, you can see that the GDP growth, if you look at the numbers, is actually declining from 3.8 to 3.1%. So, that in itself is a cause for concern. In terms of between fourth quarter and first quarter of this year. But if you take a look at the PMI numbers, they're actually on the up. So there's a bit of a distortion, but let's go beyond numbers. And I think we need to step back a little bit and understand exactly what the fundamentals are. These growth numbers for the population of Nigeria is not sufficient. Nigeria has a population of 200 million people. For us to have any meaningful impact, our growth numbers have to be between 8 to 10% on a sustainable basis. And that is when you begin to lift people out of poverty and you begin to get people back into employment. And that's when you begin to see people having what you would call feeling it. Because at the end of the day, with the levels of inflation where it is, prices are still pretty high and food inflation has not yet been put under control. So this is really where you have a significant amount of problems. And, these are the issues that we need to deal with invariably. So, at the end of the day, we need to take a look at the numbers. We are not hitting the numbers that we should hit. Growth in Nigeria at this stage should be between 8 to 10%. If it's not there, then, it cannot work. And with inflation where it is at about 20% or 22%, it's difficult for the economy to grow. Inflation has to come down to about 11% before we begin to see significant amount of growth that is sustainable and that the Nigerians will feel the impact.
So why do you think that there was a lag? Because for the fourth quarter of 2024, Nigeria's economy grew 3.84%. First quarter 2025, 3.13%. So you're right in terms of the deceleration in growth, in output growth, which we've seen. But why do you think that that lag was there?
Well, as far as I'm concerned, I think what is important is that the problem in Nigeria now is from the fiscal side. Government expenditure is too high, and the budgets are very unrealistic as far as I'm concerned. The budgets are too high, and the expenditure is too high. So expenditure needs to be kept under control, and that's number one. Number two, if you take a look at the expenditure profile of government, debt service is the number one component of government expenditure. So that in itself is a problem. While the debt is not an issue in the sense that we don't have any issues with debt in terms of default or sustainability of the debt levels have become high. And I think we've reached our headroom because our debt profile is now at just over $100 billion. So I think at that point in time, we need to begin to take a look at that. The debt profile is putting significant pressure because all the money that the savings we're making from the subsidy, I think NNPC is now beginning to at least refund at least close to 50% of the subsidy savings back to the government. And you can see that FAC allocations have nearly doubled year on year. So we got FAC allocation of a record of 1.8 trillion about a couple of months back. So, but the challenge with that is that with that allocation, it's still causing inflation. And most of that money, especially for the states and the federal government, is going towards debt service. So a lot of that is not going towards capital expenditure. So what is important now for me is that government needs to articulate its policy. As we've told you, economic reforms alone is not going to solve the problem. Yes, you've done your economic reforms, I mean, as far as I see it, it could have been done differently and still achieved better results. Be it said and done, it's been done. So we've achieved that stability, but economic reforms and stability by itself alone is not enough. You have to now put in the policies that will grow the economy, the structural reforms that we need to get done, which is what I've been saying over and over again. In terms of the trade policy, the investment policy, the industrial policy. Our industrial policies needs a lot of reform to be able to jumpstart industry. The recent tax reforms are not very favorable to investments. A lot of the issues with capital gains and all those things, they've been eroded from the new tax reforms. So what alternative incentives are you providing to be able to spur that growth? So we need to take a look at the overall policy, not just looking at stability. So government really, first of all, has to start with managing its debt profile, reducing its expenditure. I think the budget needs to be reworked and revised downwards. Expenditure needs to be kept in check. And from the fiscal side, it's causing inflation. It's the fiscal side that is really not enabling inflation to come down more. And it's the debt profile that we're having and this expenditure into debt repayment that is creating problems. Because as you know, we have 50% CRR. And to add to that, I think government borrowing is now beginning to crowd out private sector. And most industries cannot borrow at 30% to be productive. So while we understand that interest rates are high now and they need to come down over time to be able to bring down inflation, government needs to begin to put in the policies that will stimulate output and growth. So that is really why I find the challenge. The challenge is the debt profile of the government and, of course, fiscal expenditure. It's getting out of control and the budget is too ambitious. The budget needs to be revised and government expenditure needs to be kept in check.
Okay, let's interrogate that a little bit further. You said the budgets are too high, public debts also too high, that we also need to check our annual budgets. The budget for this year, which the president signed, was I think at 54.9 trillion naira, if I'm not mistaken. Let's also take note that 2024 budget has also been rolled over. So invariably, we have like two budgets working this year. You did mention, of course, our budgets are too high at around 149 trillion naira, if I'm not mistaken, as at the first quarter of this year, as stated by the Debt Management Office. If you're taking a look at a country of 200 million people with a budget of 54.9 trillion naira this year, why would you say that that budget is high? Just opposing it against perhaps South Africa, against Brazil, that, you know, we are almost the same, perhaps in terms of other things, not perhaps in terms of economy. Our president will be visiting Brazil soon. I was having a chat, I think, a few days ago too, with the Minister of Budget and Economic Planning. And they are even of the view that at 54 trillion naira, that we should even be doing budgets higher than that. Where do you have a problem with? Is it that at 54 trillion naira that we are having the budget right now, the way we are spending the 54 trillion naira is your problem, or we should have higher budgets but well-targeted spend?
You can't afford the budget. That's number one. You must be able to afford it because you've accumulated deficits over the last 4 years of close to 40 trillion. And, you know, basically, where is the impact? What is the impact of that? You're fueling inflation. If you do not control your expenditure, you continue to fuel inflation, and it's a zero-sum game. So what is important is, just like everybody does, you need to be able to control your expenditure in order to be able to tame inflation. If you have a stabilized economy, which you have, you know, inflation maybe at about 11%, we're not even talking about single digits, 11, 12%, then if you have growth, then government can now begin to talk about what sort of what is the government expenditure. Government has a recurrent expenditure. When a significant amount of your number one line item on your expenditure is debt service. So that is not a productive way to spend money. And, you know, you need to rework your budget to a situation whereby you can't fund your capex 100%, which you have some challenges there. And, you know, there's need for some fiscal reform. So it's not about, yes, you can talk about benchmarking, how that is. Yes, before you start spending or expanding your budget, control down to 10%. Even if you can spend, you need to be able to reduce to be able to retain value. If we have inflation at 20, 30%, it doesn't do well for anybody because interest rates will remain high and the economy cannot grow. So government has to also play its own role by cutting its expenditure and, you know, not fueling inflation. So when you reduce that expenditure, when you target that expenditure, and when you stop building up this significant amount of deficits, then we can all bring inflation down. That is the number one priority. If inflation comes down to single digits, then the economy is better for all. Then you can plan your expenditure as targeted areas. Where are you spending the money? Where's your capex? You know, government has a recurrent expenditure, which it uses to keep government going. But beyond that, you know, we need to understand how these expenses are. You just saw the numbers that came out not too long ago, that the debt servicing for most of the subnationals have gone up by about 60%. You know, despite the fact that subnationals have more money, a lot of that money is going towards debt service. You know, so you cannot continue to fuel debt and fuel, you know, amass deficits, you know, when you're not growing your economy. And, you know, when you take a look at the structural reforms we're talking about, you know, where is the infrastructure that is being developed to be able to look at that? The social infrastructure, health, education, and then, of course, the fiscal infrastructure. So government clearly cannot fund the whole economy, and government itself is less than the government's contribution to the GDP is less than 10%. So the government really needs to start working with the private sector and let the private sector do more. For instance, they just announced that, you know, they're going to spend about 700 billion to fix the airport. You know, for me, this is a significant amount of money that if you got the right concessionaires, you could have used that 700 billion for something else and let private concessionaires go and fund that and run the airport. Those are the sort of models that we need to take a look at. And that 700 billion, go and build health infrastructure, or go and improve education infrastructure, or go and improve road building.
But the
So
argument from
those
the Minister
that
of
I'm looking at.
the argument from the Minister of Aviation is that, of course, having good airports to also attract investment, as airports are the windows to any nation, any
The
country.
argument can be there. We know that. We all know the arguments. Why should we have substandard airports in Nigeria? That airport was built in 1977. The fact that it still survives today was because a company called Strabag, which is a strong German company that turns over $20 billion a year, builds that airport to a very, very significant class. You upgrade the airports and then you bring, you build an extension to the airport and you spec it out to very low standards and, it's ineffective. So yes, if you want to do that, concession it and let private sector people come in and develop it and, at no expense to you and use those funds and, redeploy it somewhere else. That is my argument.
Okay.
Because, you take a look at the situation whereby you are expending money on things that you do not need to when it could be done by the private sector if you do it properly. So these are the things that we need to start doing to reduce government expenditure. You need to start concessioning, getting more private sector involvement. And like I've said before, government also has to start selling down assets, some of its JV assets, to begin to restructure its balance sheet and optimize more equity within its balance sheet structure. So there's a lot that needs to be done on the fiscal side. We need to stop this excessive spending. It's not productive and it will continue to fuel inflation. And if we do not bring inflation down, the gains that have been achieved in the last 2 years, we could lose those gains because we need to build on these gains. Now it's a point in time, as you said, it's a crossroads in the economy. So where is the articulation of the policy to grow the economy now that we can say that we have achieved a high degree of stability? It's no longer about monetary policy. Monetary policy has reached its peak. There's not much monetary policy can do. The problem now is at the fiscal side and with government expenditure, and government needs to play its role to reduce its expenditure for us to lower inflation. When we lower inflation to 11%, everybody in Nigeria is better off for it.
Mr. Adebajo, I want to really get this clear because you've been saying quite a lot and I'm trying to distill all of that. I've been writing down a few things which you said, which I need to interrogate. Are you saying that the inflation that we're having in the country right now is fueled by government spending? Is that what you're saying?
Yes, that's the only place now that is left to be able to reduce inflation. It's government spending, government expenditure.
Okay.
So it's the fiscal side now that needs to shape up in order for us to bring inflation down.
Okay.
There's nothing else that needs to be done.
Okay, so where do you put cost push inflation? Inflation driven by food, by logistics, energy. Because what I also hear you say is perhaps demand pull inflation, too much money chasing too few goods. And we know that even Nigerians do not even have that money. So where do you put cost push inflation where there are still structural factors impacting? Of course, if you take a look at the inflation numbers, food inflation is still high. We know the issues that are, fueling food inflation, transport cost and all of that, insecurity. Almost every part of the country right now is feeling insecurity, even the food belts. So where do you put that if you say that this inflation is purely driven by government expenditure?
Well, I think, as you know, we've adjusted to the fuel price increase. We've adjusted to it. So I think government needs to begin to take a look at things like how Nigerians tend to extort. And I think that's where government policy needs to come in. If the government fuel expenditure is not there, fuel prices, I think, have stabilized. I think the impact of that has gone through the system. When you talk about food inflation, I think we understand that the insecurity, I think, has been quite significant in that area. That has been factored into it. If you take a look at core inflation, as opposed to which discounts energy and food prices.
Core inflation is still sticky.
Exactly. So that is really where you need to focus on. You discount food inflation and energy prices from that, and you take a look at core inflation. What is driving core inflation? Why is core inflation not coming down? Food inflation, we understand. Energy prices, we understand what the issues are there. Fuel prices have come down significantly, and I think we've dealt with that in terms over the last 2 years. The economy has absorbed that. So all the transportation costs, all those things you're talking about have all been adjusted for the increases in the fuel prices. I think we see that. Food inflation, I think now is looking at insecurity, productivity, and people taking a look at extortion. I think there's a fair bit of extortion in that. And those are the things that we need to understand to see how we're looking at the distribution channels. I think there's a lot of monitoring to go ahead and again, of course, output in terms of harvesting. So I think we'll take a look at that and discount that, but we need to look at core inflation. Core inflation will give you a better idea of how the fiscal side of things is still driving inflation up.
You also talked about the CBN's MPC, that's the MPC tools, that they've really run out of mojo. What else do you think that the MPC can do targeting inflation? Because they've kept interest rates unchanged, I think 3 times right now in a row. We're expecting another meeting in September, and you've seen a trend of disinflation. Like I mentioned yesterday on the program, for our viewers, you know, perhaps the rate at which things are going bad are improving, not that things are entirely going well. So where do you put CBN's MPC? What do you think they will do in terms of adjustments of rates for next month? Though you said that there's nothing really else they can do. They can't really, you know, put a magic wand there. Then second question around that too is, what sort of monetary fiscal coordination should we bring into it now? Because you're laying the blame on the fiscal side. When we speak to these people, these officials, they make us understand that there is so much coordination between both policymakers, unlike what we've seen in the past. So what kind of monetary fiscal coordination do you expect from the folks handling our economy right now? Perhaps a bit of industrial there.
Okay, let's take the first question quickly so we look at it. And like I've said, the MPC has reached its limits, and I think we need to understand that. The Monetary Policy Committee has not had the confidence in the inflation numbers for them to cut rates. So I think that is what we need to understand. So even though they're looking at inflation numbers coming back, they do not yet have the confidence to say, okay, we are confident that these numbers are sustainable and we can cut rates. So they don't want to cut rates again, and they begin to see the fact that inflation comes up again. So you can understand that. I think that's really where the issues are right now. But my own expectation is that at least by the end of the Q3, there would definitely be a rate cut this year. I think once we get a better understanding of that, I think the economy needs a rate cut, I think, by the end of the year, when we have a better feeling on the trajectory, on the downward trajectory of inflation, which you have called disinflation. So I don't have any doubts about that. I think that's the issue. But like I've said, the MPC has reached its limits and can only do that. The only thing that I'm expecting from the central bank and the MPC now is that they should start their inflation targeting program. They haven't started that, and I think that should be done.
How do you expect them to do it when inflation is still double digits high? Because their inflation
it doesn't
target,
matter. Inflation targeting, it means that you set a target of where you expect inflation to be going forward. So that doesn't have anything to do with the current levels of inflation. So you do your inflation targeting program. That is what it's all about. So you give confidence to the markets as a whole as to your expectations of where you feel inflation should be going forward.
Don't you think that the president gave it already for this year?
No, it's not the president's responsibility.
I know, but I'm just saying.
Let's get it clear. Let's
I had this argument with you the last time.
I don't want to get political here. Let the MPC that we know who does this issue. Central bank is responsible for inflation targeting. Let them start their inflation targeting program, and let us understand what their expectations are for where inflation should be within the next 6 to 9 months. That's all we're asking. It's a standard monetary policy tool. We understand, what the expectations are. That's very simple. Now, to your second question, yes, I think there is coordination, and I think it's the coordination between the monetary and the fiscal policy that has gotten us this far in terms of achieving this economic stability. So, but like I said, economic stability stability is not the answer. Economic reforms are not the answer. What is important, or what I feel is missing, is the trade and investment and industrial side of things. So now that the monetary and fiscal side have coordinated and they've achieved this level of stability, then I think it's important that we need to bring in the trade, especially with the Trump tariffs. You understand that we have a lot of duty in this country. We have duty on sugar, we have duty on automobiles imports in this country. Now, my big question is the fact that the automotive policy and, of course, the sugar policy, which is one of the most controversial areas, is the fact that we have 3 massive refineries in the ports in this country, and every bunch of sugar that is imported in this country, there's a duty that is taken on that, also with cars, that is put in a fund in the Automotive Council and the Sugar Council. There's a lot of money in these funds that have been built up. But the question is that on the sugar side, why are these sugar refineries not getting their sugar from Nigeria? Where is the backward integration program? Why are Nigerian farmers not actively engaged in growing sugarcane to supply these sugar factories? We've had these sugar refineries for 10 years, but they've not yet done their backward integration program. We need to look into that. That is how you grow your economy, because you grow output, and all the Nigerian farmers are growing sugarcane to support these factories. That has not been done. That needs to be done. That's an example. You talk about the automotive sector, and you begin to see a lot of companies beginning to do assembly here. It's not enough. The automotive people, we need to move from an automotive policy to an automotive act. So all these monies that have been put into these funds over the years, what has happened to them? Why have they not been used to be able to help with the backward integration and support a lot of all these industries? So that is really where the concern is now. So we need to sit back and understand how to develop the policies, which is the trade policy, from Trump, and all this, how this is affecting us, because we have a lot of duty that we've put on a lot of things that are impacting industry. We need to review that. And then, of course, we need to take a look at our industrial policy, which is very important, and we need to take a look at our investment policy. The new tax reform bill has impacted investments, because a lot of the incentives in terms of pioneer status and a lot of capital gains tax, has been removed. So how is government compensating on that? So if you take a look at the FDI numbers, you can see that they are all-time low. So we're not attracting FDIs. I'm not even worried about FDIs right now. What I'm worried about is LDIs, the local direct investments. The people in Nigeria who are here already, what incentives are we giving them to expand their factories? And we're importing $25 billion worth of goods and services from China. So where is the bilateral? How are we engaging China on a bilateral to ask China that all these things we're importing, why can't we get Chinese companies to partner with Nigerian businessmen to come and set up all these factories in Nigeria instead of importing all these things from China? So that is the next level of deliberate policy making that I want to see, that will be able to grow the economy to 8 to 10% on a sustainable basis. So in addition to the coordination that we've seen between monetary and fiscal policy, let us begin to see coordination with trade, investment, and industrial policies. And then let us see that articulation, because I don't see that articulation. What I see now is that everybody's now beginning to focus on politics and the 2027 election. We're beginning to lose focus on the economy. And if you do that, all the gains that has been made, we can go back to a zero-sum game. And that is really going to not be productive for Nigeria. So that is my response to when you talk about that coordination. Can you tell me confidently now where the next policy for growth is? Have you seen a document for growth?
How about the Nigeria First policy? How about the Nigeria First? Yes, how about the Nigeria First policy? How about the world-based development program?
It's a policy. What's the implementation? There's policy, there's implementation. What are the incentives that go with the policy?
Aren't you drawing a bit of optimism or inspiration from at least the president saying that?
No, you don't draw optimism and inspiration. A development is deliberate. There are certain steps you need to do to be deliberate. You don't set up a factory by policy. If you want to drive farmers to grow sugarcane, what are you doing about it? It's not just about
But the
policy. You
BOI
need
said just a few days ago that they've been giving big companies money. Remember that the president I think in July of 2023, in the heat of the cost of living crisis, they mentioned some interventions to big businesses in Nigeria, as well as even SMEs, that's micro enterprises in Nigeria, about 75 billion naira to big firms in the country, 50 billion naira to SMEs. What do you say about that? And the BOI MD, as well as the Minister of Industry, Senator Eno, did mention it a few days ago that disbursement is ongoing, though they were having a few challenges there. What do you say about that?
Well, like I've said, you know, those are positive developments and steps in the right direction. And I think the Bank of Industry is doing a very good job in terms of, you know, creating all these loans. And we're moving from the CBN-based intervention loans into now proper development banking type facilities. That is fantastic. And we need more of that, and we need to increase that capacity. But you see, you also need to track impact, you know, because if you're going to grow the economy, you look at these islands of success. You know, islands of success has to turn into a continent of sustainability. And we need to have a program. We need to just have a program that is sustainable. If you have a policy, then you need to look at it because there is a manifesto. How many jobs did you say you were going to create in your first year or your second year? These are things that are deliberate. I want to move away from the policy side to the implementation. Let us see the articulation of implementation. Okay, we have seen that in the last 2 years, macro and fiscal have combined and they have worked together to achieve economic stability. Fantastic. It's a tick in the box. Now we're saying that economic stability and reforms are not enough by themselves to grow the economy. And we need to do more. For instance, you know, you're talking about that. My question I've always asked is, why is the Naira not trading below 1,000?
I also asked that
Based
question.
upon a lot of all these questions that we've seen. So when you talk about all these things, I'm not talking about the policy. Let us leave policies alone. We can talk policies as statements. We need to see the deliberate implementation of all those things. Like you said, the Bank of Industry intervention, the Bank of Agriculture has recently been recapitalized. Okay, so how will that impact agricultural production? And what is the Bank of Industry doing to ensure that the 4 refineries we have, the 4 sugar refineries we have at the port, what is the Bank of Industry, the Ministry of Agriculture, the Ministry of Trade and Investment doing to ensure that we can produce to support the capacity for those 4 refineries, sugar refineries, instead of importing them? We have the land, we have the farmers. So why can't we put in the policies to be able to stop importing sugar to our 4 sugar refineries? Because the capacity of those 4 refineries, when you get them going, can supply the whole of ECOWAS and can even Africa, and can be a major contribution for Nigeria to the African Continental Free Trade Area. So there is capacity. We have to understand those linkages. It has to be deliberate. So yes, BOI, Bank of Agriculture, how can you support the growth of these 2 sectors, automotive sector and the sugar sector? Let us see the deliberate policies. That is what I'm talking about.
Mr. Adebajo, you've really hit a nerve here because the question, your remark earlier on, why can't we see 1,000 naira to $1, for example? I've asked it here even on the program. And I even took it further with an official of the central bank, a deputy governor, I must say. There was a time I even said it on the show a few weeks ago that I want to see a naira, for example, that is trading around 1,000 naira to $1. And he asked me, said, Nancy, why do you want to see a cheap naira? You know, so what do you think it would take for us to have a naira that is trading higher at 1,000 naira as against 1,005 that it is right now? Because his argument to me was that, okay, Nancy, we're seeing the industrial sector, manufacturers now going for local incentives. That is, they are doing now, they are taking over raw materials made in Nigeria against perhaps importing because of that. And I told him, I said, excuse me, sir, I don't think that is enough reason. But for you, even as an economist, How do you think we can actually get there? Or do you think that the monetary policy, the CBN officials are intentionally also leaving it there? But they will tell me too is a matter of markets, is market forces.
Okay, let us take a look at the arguments one by one. Devaluation of Naira is not an economic policy. I'm against the devaluation of the Naira. I do not think the Naira should have been devalued the way it was devalued over the last 2 years. I think it was totally unnecessary. The devaluation should have been gradual. And, if you take a look at the way it was done over time, and let us take a look at the arguments they put forth then. They said it was a demand and supply issue. Okay, now we have, we now have 40 billion in reserves. Okay, and for the first time in a long time, 40 to 45% of deposits in Nigeria are in foreign exchange, about $35 billion. So the amount of money in our reserves and the amount of money in all our domiciliary accounts is more or less the same, is nearly the same. Okay, so the growth of dollars in our system has increased from last year to this year because of the structural reform. So the supply of dollars in Nigeria has increased significantly. The diaspora flows is hitting a close high of about 30 billion from 25 billion because of the policies of the central bank to encourage these international money transfer operators. The oil production has gone up. We've seen oil producers going up. The rig count, according to the NUPRC, is going up and drilling activity is increasing. So that means that all those things are there. NMPC, as far as I'm concerned, should go and cancel all those forward contracts and refinance them and have a bond. They should go and issue a bond, which is more transparent. Because right now, what is causing a lot of distortions are all these NMPC forward contracts. So refinance those contracts and go and do a Eurobond where we know what the total amount is and we know what you are paying every month. It's very simple. Then you have transparency on how much of those exposure is. Once you remove all those things from the place, then what else, what is the issue? So those people who talk about demand and supply, we have more than that now. So should it not fall below that? So when you take a look at all these arguments, you can see that I do not see any reason why this Naira is at 1.5, why it shouldn't be trading at maybe even 800 Naira.
Yes.
Exactly. So because if you take a look at all the fundamentals, some will argue about purchasing power parity. So what are you doing? You are not China. What are we exporting?
That we want to make 1.5.
That we want to make our foreign exchange, but we're not an exporting nation. Well, the most of our exports are still petroleum products. So, and that's set up by international prices. So the issues we're talking about, Nigerian companies should be forced to use local raw materials based on policy. And not only a policy, but also law. So that you know that if there's a raw material that is available in Nigeria, then you put a massive duty on it. You put a 1,000% duty on it so that you stop that importation and everybody will quickly go and source that material locally. So this is what I'm talking about, deliberate trade and industrial policies. They go together. You cannot have a raw material available in Nigeria and be importing it. So that is when you now put a duty on it. And, like I've said, we have to be deliberate on a lot of all these policies. So when you take a look at the foreign exchange regime, we've had this argument, we've written a paper on this as to why the Naira is trading. And, so you look at all these considerations. So if you take a look at all these considerations you're talking about, that stability we're talking about should be reflected on the exchange rates. And, you take a look at even if you take a look at the banks, the bank's dollar loan book is also quite healthy right now. It's increased. So all around, we have this sort of stability you're talking about because people have confidence in the domiciliary accounts. It is this confidence that we need to restore. You see, because confidence is also another aspect. If we have confidence, then Nigerians have $35 billion in their domiciliary accounts.
Okay.
It's so for me, that is what I'm looking at. Now, you have to build on this confidence. So we need to also sustain this confidence so that this $35 billion or 40 to 45% of our total deposits are in FX in Nigeria. That should tell you something.
Okay. Mr. Adebajo, we just have like 2 minutes or so to end this interview, and I would like you to comment on this question around humanizing fiscal reforms, because it seems that even the fiscal reforms that the president is talking about, you were talking about earlier, from policy to impact, policy to implementation, and whether the journey around that implementation is where Nigerians will feel the impact. So how can we begin to design, I'm not talking of we because I'm not part of them now, how can the government begin to design a framework that Nigerians can actually feel, you know, will not feel pain anymore in terms of the crisis, you know, that we are having, where we're seeing a lot of us, you know, really go down as a result of the reforms in the country. Then this question came from a viewer, from Ayuba in Plateau State. He's saying, why is the deflation only affecting food products? I don't think we've gotten to deflation yet. Why is deflation only affecting food products? What of building materials, clothing, fuel prices? There will be no impact if those areas mentioned are not affected by deflation. Ayuba, I don't think we are experiencing deflation right now in Nigeria. What we are experiencing is disinflation, because deflation, of course, is the decline in the prices of goods and services, leading, of course, to an increase in purchasing power of money over time. So that's not what we are experiencing now. But I understand what he's asking in terms of why are we not seeing the prices of these categories of products go down. So, Mr. Adebajo, can you just comment on that as we close?
Well, yes, I think the points made is that, you know, the social intervention programs have failed. And they've been mired in some sort of corruption scandal. So I think it was President Obasanjo that said reforms must have a human face without a doubt. Because, you know, you must have a human face to your reforms. And that's a major source of concern now, because Nigerians have you know, suffered for the last 2 years. And now we say we've achieved economic stability. There must be some sort of succor in terms for the ordinary people. My biggest concern is that unemployment numbers are distorted. The way we are capturing unemployment does not...
It's as if we're in full employment now.
We're not, and that's the reality, that we're not. And I think we need to take a look at that employment numbers. Even if we're not capturing employment, how many jobs have we created over the last 2 years? That's something we need to look at. We need to begin to put a human face to this. So for me, the fastest way to do this and the easiest way to do this is to reduce inflation to 11%. If you reduce inflation to 11%, everybody will benefit at all levels.
And how long will it take us to reduce it to 11%? It's a long walk to freedom.
It's not a long walk to freedom. Like I've said, government has to reduce their expenditure and they have to check their spending and their debt. If government does that, then we'll see inflation coming down significantly. They are the only ones that are fueling inflation in the country right now. If they do the right thing, then we'll get inflation to 11%. Monetary policy has reached its limit. And at the end of the day, like I've said, now that fiscal policy and monetary policy makers have been working together, the next phase now is to bring in trade, investment, and industrial policy to grow the economy. So that's what we need next.
All right. I think we'll leave it at that. And I hope Ayuba from Plateau State has gotten his answers, you know, because what Mr. Adebajo is essentially saying is that if we see all those things rightfully done, it will cascade to an average Nigerian. And of course, companies will feel it and households will feel it. Thank you very much, Mr. Adebajo, for joining us today on the program. Thank you very much for your insights, as always. All right, I've been speaking with Tilewa Adebajo, who is the Chief Executive Officer at the CFG Advisory. And that's it. It's a wrap on today's edition of the program. Thank you all for joining us, and thank you for your company, as always. Thank you for your questions, too. I could just take from Ayuba from Plateau State. Thank you for watching. Please join us again tomorrow, same time on this station. I am Nancy Naji. Be the best you can be, and be the change that you want to see. Bye for now. Thank you for making it up to this minute, watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social our media, our platforms, where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.